We don't look at it that way. We believe it is a technology company. We believe that it is probably going to be one of the biggest leaders in what we call mobility as a service. It's based on artificial intelligence. Data is the new oil. And Tesla is the leader in the United States. It has roughly a $55 billion market cap. This is a $2 trillion global opportunity. We think Tesla is way ahead of the game. They've got 10 billion miles of data plus that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. I believe they're building out an autonomous taxi network, that it's on the drawing board. And those margins are software as a service like margins. So in the 80% range instead of the 30% gross margin range. Because auto analysts are auto analysts, they can't see this. This is a software as a service model. This is nothing that traditional auto analysts are used to analyzing.
Well, that was Cathie Wood of Ark Invest banging the drum repeatedly over the last half decade on A, the enormous opportunity that autonomous robotaxis represent, and B, how far ahead of the so-called competition Tesla really is. And now, in this video, Ark Invest have just published some new research on the automotive industry with two huge predictions. Given Ark's terrible track record on predicting things about autonomy, electric vehicles, Tesla stock and so on, I don't know why anyone would pay attention to this new research, but if you're a fool who still wants to hear what Ark Invest have to say, let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First, to set the scene, I'm going to play a few quick clips of Cathie Wood of Ark Invest over the last half decade from 2017 to 2020, describing Tesla, Tesla stock, and the enormous opportunity that autonomous robotaxis represent. This was Cathie Wood half a decade ago in 2017.
So we look at Tesla not as an auto stock. Those who do look at it as an auto stock are comparing it to the OEMs and are finding it just ridiculously expensive. We don't look at it that way. We believe it is a technology company, and we believe that it is probably going to be one of the biggest leaders in what we call mobility as a service. We put out a white paper in March about mobility as a service, and we think autonomous taxi networks globally are going to be a $2 trillion market, and they are going to cause natural monopolies. And this is, again, is based on artificial intelligence. Data is the new oil, and Tesla is the leader in the United States. It has roughly a $55 billion market cap.
Well, that's awkward. Back in 2017, when this was recorded, Tesla stock was the largest position in 3 or 4 of Ark's ETFs, and unfortunately, in the intervening half decade, Tesla stock's only up about 15%. Oh, hang on a minute, sorry, I'm just checking my notes here. Oh, that's got an X in front, that's not a percent. So Tesla up about 15 times since this was recorded. This is a $2 trillion global opportunity. I think if people think about Tesla in that light, they're not going to think it's overvalued. That was 2017, aged relatively well. Let's go ahead 1 year to 2018 to see what Cathie Wood had to say.
I've got to start with Tesla because for months now you have said this is a $4,000 stock.
Just a quick bit of context, that was a 5-year price target, aka 2024, and that was also pre-5-for-1 stock split, meaning that's about $800 per share in 2024. And as I record this, let me check my notes again. Yeah, Tesla stock a little under $800 per share, 2 years early. More proof that Cathie Wood and Ark Invest are not credible. And when they say things that sound crazy, it's because they are, not because they're right.
And all the drama over the last few weeks, do you still think that?
Yes, actually. Our conviction has increased recently because of their new chip. We think they're 3 years ahead of any other auto manufacturer in 2 ways. One, very importantly, is the chip. and the other is their battery technology. So yes, our conviction has increased.
I guess the model that gets you to 4,000, right?
Yes.
First of all, what is that, a $700 billion market cap?
Yeah,
I mean, roughly speaking.
There.
So, I mean, there's a distance between here and there.
Yes.
Can he execute, because it seems basically like the cars are a Trojan horse for this bigger world domination strategy for moving people around. Can he actually get every step along the way to bridge to that future, even if you thought it was going to happen?
Oh, we think he's arguably, Google's doing a good job, but we think Tesla is way ahead of the game. They've got 10 billion miles of data plus. This is an artificial intelligence project, and it is going to take Tesla from 20% gross margins to 80% gross margins. It's a software as a service, transportation as a service model.
So that was Cathie Wood back in 2018 talking about Tesla AI. At the time she made these comments, I don't think a single analyst on Wall Street covering Tesla stock had uttered the words artificial intelligence and Tesla in the same sentence. In fact, it wasn't until 3 years later that Tesla held their first AI day, which coincidentally was the very first time that most of the stock analysts on Wall Street covering Tesla actually used the term Tesla and AI in the same sentence. However, they weren't correlating saying Tesla's an AI company. They were saying, why is Tesla holding an AI day? They make cars. I don't understand. That was 2018. Let's fast forward a year. What did Cathie Wood have to say in 2019?
I think he thought, and the company thought, that their autonomy day last week was going to give them a nice opportunity, that once analysts understood how far ahead of the competition they are, whether it's Waymo or Cruise, in terms of autonomy, and how soon it is going to evolve, and that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know
what the f they're talking about. Oh, sorry, I didn't mean to interrupt.
That they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it, because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together.
Amazingly, or embarrassingly, depending on how you like to look at things, these comments are still as true today, 3 years later, as they were then. I can count on one hand with no fingers how many analysts covering Tesla stock actually understand the company. A few are getting close. The vast majority, in a nutshell, no clue. They don't even understand what they're looking at. Actually, I take that back. They don't even have their eyes open, so they can't even see anything.
We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency in this stock. It is our highest conviction idea for a reason. Other point, this trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe is going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
What a clown, hey? Cathie Wood, 2019, saying Tesla stock's done nothing for half a decade. We believe there's going to be a huge breakout. And as we heard earlier in the video, Tesla stock's only up about 15% since these... Oh, I forgot. It was 15 times ago. I keep making that mistake. It must be because I'm high. Maybe Cathie Wood will finally start making some sense in the 2020 clip.
4,000 by when?
Well, we are in print, actually. We don't even talk about this number. It's a 5-year time horizon.
Okay.
Originally 4,000, but when we did our next run at the model, we came out with 6,000. We've just completed another run. Stay tuned. It'll be on GitHub within a few weeks.
This is a company that's only a handful of quarters been profitable. How do you apply that value? How do you get to those numbers?
That's even before autonomous. We're not even talking about anything autonomous right now. We believe it will be very nicely profitable, and it's not going to be profitable just because of electric vehicles. We think the margins on electric vehicles are going to be much higher than most analysts anticipate, but it's going to be because of their autonomous taxi network. We believe they're building out an autonomous taxi network, that it's on the drawing board. And those margins are software as a service like margins. So in the 80% range instead of the 30% gross margin range. So yes, and because auto analysts are auto analysts, they can't see this. This is a software as a service model. This is nothing that traditional auto analysts are used to analyzing.
So when you talk about software as a service, these robo-taxi fleets, are these assets, or are the cars themselves owned by Tesla? What does that business model look like?
They can be owned by Tesla, and Tesla may start off the taxi network by owning them, but we believe that fleets, that we'll have business operators of fleets on top of Tesla's network. And they will get a platform fee. Originally, we thought that would be sort of like Uber-like the 20 to 30% take rate. We actually think it will be higher, certainly in the early days, because Tesla's so far ahead. One of the reasons is Uber, which could have been collecting data on US roads all of these years, didn't. It didn't outfit or cover cars with sensors because they weren't their cars, right? Tesla has roughly 700,000 cars out there collecting data, which is going to be which is going to power the autonomous network. No one's close. Google just announced a couple of weeks ago they have 20 million miles worth of data. The winner in autonomous platforms and in any artificial intelligence project is that company with the most data and the highest quality data. That company is Tesla. This is a software as a service, transportation as a service model. It's hard for analysts and many to conceive of this because it doesn't exist yet. But this is how we think it's going to work.
And that brings us to the present moment. So let's check out this latest research from Ark Invest on electric vehicles, the automotive industry, and most important of all, autonomy. Quote, "The auto industry is likely to grow in units but decline in enterprise value. According to Ark's research, during the next 5 years, the auto industry as measured in units will grow, but as measured by enterprise value, it will shrink. In 2021, the number of light vehicles sold globally was 78 million and the enterprise value of automakers roughly 3.5 trillion. According to IHS Markit, during the next 5 years, auto industry sales will increase at 4.7% compound annual growth rate and hit a new high, speaking of, at 98 million units in 2026. Ark's non-autonomous EV base case agrees with the consensus view that unit sales will increase by 20 million during the next 5 years, but that the enterprise value of global automakers is likely to drop roughly 20% to 2.8 trillion. If autonomous taxi services were to emerge, as Ark's research suggests will be the case, then vehicle unit sales are likely to drop 8% to 72 million, cutting the enterprise value of traditional automakers by more than 60% to 1.3 trillion, as shown below. On the left here, we've got enterprise value of automakers today. In the middle, this is Ark's autonomous scenario. In other words, autonomous robotaxis are available widely, and this massively cuts the enterprise value of automakers because they're not adding nearly as much value as previously. And on the right, 2026 non-autonomous case. In other words, robotaxi problem isn't solved. Here's what happens to enterprise values of automakers. Historically, unit sales have been a good proxy for growth in the enterprise value of the global auto industry. After declining from 2017 to 2020, auto sales increased roughly 5% in 2021, as shown below, leading to optimism that the enterprise value of the global auto industry would revive and move back towards its historical highs. Here we're looking at global passenger vehicle sales. The trend was not looking pretty leading up till 2020. Obviously, we did have a pandemic in the middle here, but things are starting to rebound. Now, we believe the auto industry is undergoing two profound shifts that are breaking the link between unit sales and enterprise value, and this is the stuff to pay attention to, at least if you're a stock investor. The first is a shift from the internal combustion engine to the electric vehicle, and second, albeit early, a shift from human-driven to autonomous vehicles. In 2021, the breakdown in auto sales by powertrain highlighted the challenges awaiting non-Chinese automakers, basically all of the brands you've heard of, with 85 to 95% of revenues in gas-powered vehicles. In other words, 85 to 95% of the revenues of traditional automakers are going to vanish in the next few years. In 2021, while global vehicle sales did increase 5.1%, the 1.7% attributed to gas-powered vehicles accounted for only 1/3 of total growth. Pay very close attention to this next line, ladies and gentlemen. And the 112% attributed to electric vehicles for 2/3, as shown below. In other words, the consumer preference shift towards electric vehicles has gathered momentum, and this is a whopping understatement. Check this one out. Make sure you let this sink in. We're looking at vehicle sales growth year over year. In black, dinosaurs, gas-powered vehicles. Purple, electric. So we can see in 2018, gas vehicle sales down 1%, EV sales up 69% year over year. The following year, 2019, the trend becoming super clear. ICE vehicle sales down 7% year over year, EV sales up 18%. In 2020, and yes, there was a pandemic, but the trend continued. ICE vehicle sales down 16% year over year, EV sales up 33%. And now, the watershed moment, after a collapse in global vehicle sales during the pandemic and then a strong rebound, the rebound shows us what consumers want. This is the future. ICE vehicle sales rebounding a whopping 2%. Electric vehicle sales up 112%. Give or take, EV sales increased about 50 times more than ICE vehicle sales relative to previous years. 50 times more. Enough said. The consensus forecast, which has never been wrong in the past because groupthink seems to always be right? The consensus forecast for global unit sales in 2026 is around 100 million unit sales, in other words, vehicles sold, with 80 million of those being gas-powered and 20 million electric. And I personally think the consensus forecast is made up of consensus of people who are going to be completely fucking wrong. EV adoption happening way faster than they think. Translated into growth rates, gas-powered cars will continue to grow at 1.7% compounded annual rate and electric vehicles 33% through 2026. If these consensus forecasts prove correct, I doubt they will, then the enterprise value of global automakers is likely to decline 20% from 3.5 trillion today to 2.8 trillion in 2026 as shown below. If you want to pause the video if you're a numbers nerd, feel free. If Ark's autonomous forecast proves correct, then total vehicle sales are likely to drop roughly 8% during the next 5 years, from around 78 million units in 2021 to around 72 million units in 2026. Moreover, 44% of the 72 million are likely to be gas-powered, 26% electric, and 30% autonomous electric. In other words, 56% total electric vehicles with a fairly even mix between electric and non-autonomous, and basically a Tesla. What we're looking at here is the 2026 Ark forecast of vehicle sales by drivetrain and autonomy. Autonomous electric vehicles in purple, 30%. Human-driven electric vehicles, aka death machines, 26%, and 44% human-driven gas-powered vehicles. Notice, there's no autonomous gas-powered vehicles. Ark continue. As a result, the enterprise value attributed to automakers in 2026 will be 1.3 trillion, with autonomous electric automakers and electric vehicle automakers. Does anyone know any companies that happen to make autonomous electric vehicles? Just asking the question. Please let me know in the comments below. If they were doing okay and had reached volume production and were doing so profitably and had long wait times, I might buy this stock. Unfortunately, I don't know any companies like this today. Maybe I'll just go buy Rivian and Lucid stock, close my eyes and hope. Each accounting for around 0.4 trillion and gas-powered automakers around 0.5 trillion as shown below. We're now looking at enterprise value, autonomous in purple, electric in green, and gas-powered in black. These figures are in trillions. If our assumptions for electric and autonomous vehicles are correct, then today's 3.5 trillion in global automaker enterprise value seems to be discounting a much higher margin profile for the industry than it has achieved in years. In our view, the shifts to electric and autonomous are unlikely to create a rising tide that lifts all boat. I agree. Instead, the industry seems to be at risk as autonomous platform providers extract value at the expense of hardware manufacturers' margins. Another way to think about this, the only way to be a viable automotive manufacturer in the future is to also offer autonomy because your margins are going to contract massively. The only way to make money and survive, to stay in business, to be profitable, is the software component, autonomy. If we are wrong and autonomous does not scale, the industry still seems overvalued based on the accelerated consumer preference shift towards electric vehicles at the expense of gas-powered vehicles. Again, great point here. It absolutely stuns me to look at the valuations of today's legacy automotive manufacturers. It's pretty funny to say this because most people, if you ask most people out there, they look at Tesla's valuation and say it's insane, it's too high. Meanwhile, there's this guy, an Ark Invest, looking at traditional automotive manufacturers and thinking their valuations are way too high. The auto market illustrates why active portfolio management will be critical as innovation disrupts the traditional world order. I think this is a low-key hint from Ark that investors managing these funds are going to need to dump enormous quantities of stocks from legacy automotive manufacturers before they go bankrupt. Of course, I could be misinterpreting this. This is a great line here. Disruptors can camouflage the underperformance of traditional players and create value traps, stocks that are cheap for a reason. So the short story here, based on this new piece from Ark Invest, they personally do believe autonomy will A, be solved and B, scale, and I also agree. I'm Not exactly certain on the timing. Again, my Tesla valuation model has the first Tesla robotaxis doing their first paid fare somewhere on Earth in the later half of 2024, but this is still fairly uncertain. But Ark and I are both very confident that autonomy will not only be solved, but will scale. Assuming that's correct, there's going to be a catastrophic value destruction in the traditional automotive industry, not just for manufacturers of ICE vehicles, but also manufacturers of electric vehicles who don't also offer autonomy. So I guess for a company to be in a strong position, likely to survive the next decade rather than go bankrupt in the automotive transportation industry, they'll need to be profitably producing electric vehicles at scale that consumers love with huge profit margins, and they'll also need to be the leader in autonomy. It is a winner-takes-most market after all. Such a company would probably have an unassailable data lead. They'd have cars covered in sensors, millions of them on roads, collecting data, improving their autonomous software. They'd be hiring aggressively, developing their own technology, their own chips, and so on. And they'd also be publicly talking about their goals in solving autonomy. But unfortunately, I'm unaware of any companies in such a situation, so I'm just going to keep my money sitting aside, hoping and dreaming that one day such a company may exist. So hope you guys and girls have enjoyed the video. And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment to gain a ton of exclusive content, including my Tesla stock price targets, which honestly make ARKs look like an absolute fucking joke, which is really saying something, plus over 100 exclusive Q&A videos, loads of other content and perks. So I'll see you over on Patreon. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.